Hi, everybody, and happy Friday. This is Gina Huff with the Williams team here in Austin, Texas, here to give you your weekly update on what's happening in the real estate market here in town. Bottom line, it's kind of like the weather in Austin these days. It's pretty steady state. Interest rates, they're still pretty high, bouncing around at around 7%. We know that the Fed has said that they're going to boost rates again a couple of times in small increments this year. So we expect rates to stay relatively high for the next several months. From a prices standpoint, we did see a big drop in prices, almost 16% on average across Austin from the peak of last year to today. But week on week, month on month, at this point, prices are really pretty steady. We do expect to see prices kind of drift slowly down 5 to 6% between now and the end of the year. That's just kind of the normal seasonal pattern, and we expect that to continue. And inventory here is still super tight. We've only got about 4 months of inventory available in the market, and new listings are declining slightly, as always happens at this time of the year. So it's really still technically a seller's market in Austin, even though compared to last year, buyers have a lot more power than they did. But it's still a very tight, very hot, very strong market for sellers here in Austin. So generally speaking, steady state. We have been hearing some news lately about the commercial real estate market that I thought I would share, that it might be kind of interesting to you guys. So there's about $2 trillion in commercial real estate that is going to mature, loans in commercial real estate that's going to mature in the next, call it 6 months, and need to be refinanced. Unfortunately, they are going to have to refinance from a relatively low rate to a relatively high rate. And at the same time, traffic and occupancy in commercial real estate has not recovered to pre-pandemic levels. And so experts are really predicting that there's going to be quite a few defaults in the commercial real estate market. And you're probably going to hear the media start to talk about that, and it's probably going to sound kind of scary. And you're probably going to hear people say things like the commercial real estate market is a leading indicator of residential real estate. If the commercial market's going to bust, the residential market's going to bust as well. But I wanted to give you some context for what you're going to hear so that it might reassure you a little bit. Bottom line, I think both the commercial real estate market and the residential real estate market have really fundamentally changed compared to the last time we had a big real estate bust back in 2008, 2009. Um, Commercial, as I've already said, occupancy rates and traffic rates are just way, way, way down. So there's a lot more inventory of commercial real estate than there is demand for commercial real estate this time compared to what there has been in the past. And from a residential standpoint, we're seeing a lot of really fundamental differences. Back in 2008-9, it was a subprime lending crisis. We had a lot of people with really poor credit ratings being given loans pretty aggressively, and they were just not able to sustain it when the economy took a little bit of a hit. The percentage of mortgages that are subprime now is minuscule compared to what it was back in 2008. Secondly, the inventory in the real estate market is far less than it was in 2008. So that relatively speaking, supply versus demand is much more favorable now than it was back then. We had a lot of new construction back then, and a lot of houses were sitting empty. And so people had options. They just don't have those kind of options today. And lastly, the percentage of borrowers who are underwater, who owe more on their house than their house is worth, is below 1% now. And it was 10 and 15% back in 2008, 2009. So bottom line, we do not expect to see a repeat of that. We do not expect the residential market to follow as closely with the commercial market as it may have in the past. There's going to be some ripples, of course, changes in pace of activity and changes in prices a little bit here and there, but nothing to the magnitude that we've seen in the past. Fundamentally, we think it's still very strong, and Austin in particular, still very strong. So let us know if you have any questions about that or anything else related to real estate. We are here to help you, here to answer questions, here to help you get what you need. So just give us a call. Hope everybody has a great weekend. Thank you.